Hello everyone, Simon here with AvaTrade, and we're starting our weekly webinar. They called your weekly trading plan, and I want to welcome everyone. And for the new visitors, I just want to say a few words, and I think the title pretty much speaks of it. We're trying here to make a plan for the week, to create a structure, to create some um, ideas, and try to stick to them in the upcoming week. And that's what we do, and we'll go through a few things in a moment. Before we go, excuse me, before we go any further, I'm going to read the risk warning. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as investment advice, a recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. And you can find a full risk disclosure statement at AvaTrade website. So also here, you can keep in touch with us. You can follow us on Twitter, and YouTube is a great source of information. We have a lot of things posted there, including tutorials, webinars, and all kind of things that could be very useful. And this is our agenda. Pretty much we'll go through indices, stocks, commodities, Forex. And I like to start with the big picture, of course, try to understand what's happening and what's affecting the markets. And of course, we're still influenced by COVID. And unfortunately, the war has been going on now for more than 3 weeks. And of course, everyone's being affected by it in some way. A lot of people following it, a lot of people giving support to Ukraine, a lot of things happening, countries giving support. Just a few million people fled from Ukraine to the Eastern European countries. And it's really amazing what those countries are doing for supporting those people and giving them a place to live and everything else. So we'll move on into things that are happening this week, and this is the economic calendar. Before we go there, I just want to remind everyone that last week it was a very special event. There was the first increase in interest rates from Feds, and we'll take a look in a moment on the platform what happened there. So market reacted negatively to it first, and then recovered, and then we had a move higher. We'll discuss markets in general, and then mostly the equity markets. Now, as far as the economic calendar, again, I like to say that I encourage all of you to really use this tool in your trading. It's not necessary that you be specifically using all the details, but knowing that certain announcements are coming out. And what I do here, I take out the announcements with the high impact, they're all in red. And if you take a look at the economic calendars, there's more events, and you probably should look into events that have to do with the countries and markets that you trade, something that makes sense, something that might affect trading in those instruments. So Sunday we have the interest rate decision from China. We'll talk about China in a moment as well. We have Governor of Bank of Australia speaking on Monday. We have CPI inflation numbers from UK on Wednesday. The Fed Chair Powell speaking on Wednesday, and a monetary policy meeting announcement from Japan. That's also on Wednesday. And on Thursday, we have manufacturing PMI from Germany, interest rate decision from Switzerland. Interesting. We have PMI from European Union, market PMI from UK, and durable goods numbers from US. So these are the things. As you can see, there are a few important things, including the Fed speech and inflation numbers and so on. So pay attention to those. Now we're going to switch to the platform, and today I would like to speak for the following things. We'll start with indices and some stocks. Then we'll move to commodities. Then we'll talk a little bit about Forex, and we'll finish with Bitcoin. I'm not going to go, as usually, I don't go through all the cryptocurrencies, as Bitcoin is the leader, pretty much most followed, and most actions are happening in Bitcoin. So let's start from indices. I'll bring up the chart of S&Ps. And before we go there, I just want to give you a statistics what happened last week. So Dow Jones had had a move of about 0.8% on Friday, and S&Ps on Friday added 1.2%, and Nasdaq added 2.1%. So for the week, they finished Dow Jones and S&P. They finished 5.5%. That's for Dow Jones, 6.2% for S&Ps, and 8.2% for Nasdaq. So Nasdaq had the most recovery, as it actually was in a deeper losses coming into the week. So let's take a look at S&P as an example. And I want to bring this over here. This is when the news came out. So already on that day, or actually we started move up on S&Ps on the 15th, and the market was pretty strong. We're trading around 4,300, 4,315 right here. And then the news came out, and the market reacted initially to the downside, that recovered, and then we went higher. And we actually finished the week on the highs. And take a look on the weekly chart. It was a very, very strong move. And now, what could be next here? And let's take a look at the chart. This is the daily chart. So as you could see, we're really at the key levels here. And why am I saying that? We had few attempts to break these levels here. So since we start falling on the 10th of February, we made a nice drop to around these levels, 43.80, and then we bounced from here. We tried to move higher. So this was the first attempt. The high here was 4467.75. The next day was a higher day, but we couldn't really close above it. And the high here was 44.84. And then the next day, on the 17th of February, we really start falling here. And then we start recovering, and we created a new resistance. And then in the recent days, with all this move, like we said, a really robust move on the market, we're facing the same levels here. We closed on the highs, 44.64.75, and interestingly, it's really next to the levels from which we dropped. We made kind of a new low or lower low in previous. So a lot of analysts are really wondering what's going to be next. As they said in February, we couldn't break this level twice. So we'll see how the week starts and what's going to happen. But in general, let's draw the line here. This could be the current level, could be a strong resistance here, especially considering that we have a lot of interest rate increases in front of us, and we do have a lot of uncertainty due to geopolitical situation in Europe with the war and everybody involved, and threats and everything else. So it's very interesting how the week will start. So we are facing really, really key levels here, and if we break or if we bring the moving averages, as you could see, on Thursday, we had a closing about this moving average here. This is the 50 moving average, 50-day moving average, and now we're on the way up. So it could be that if we do break this level, nothing is in stone, nothing is concrete, right? So we can go higher here, definitely, if they choose to bring it higher. So the next level we might be facing is the 200 moving average on S&Ps. That's a scenario. And of course, if we're really facing a strong resistance here, and we do see some panic on the market, we might come in and go and retest the lower levels here. So that's S&Ps. And if you look at other indices, it's pretty much similar picture. If you see Dow Jones, actually Dow Jones could go a little bit higher before it didn't really reach the levels of this resistance from which we had the recent fall. So it has a little bit space to go, possibly. And let's take a look at Nasdaq. Nasdaq is out of this previous resistance here, and it's also on the way. We didn't reach that level either, the level of 17th of February, from which the major fall happened, which allowed to break the previous support here. So also Nasdaq, if they choose to bring the market higher, Nasdaq has a little bit more space to go to the upside. Again, I'm going to bring the S&Ps. S&Ps has reached that level, and that's why we might face a strong resistance here on indices. So this is as far as US indices. And I said I'm going to talk about China. Take a look, the recent fall on Chinese market was really, really strong. And a few things were there. The major thing, there was a lot of panic because SEC said that they might be delisting Chinese stocks, and market reacted to it really negatively. And then we had the nice recovery on Wednesday, a little bit correction on Thursday, and Friday was a very strong day. And I guess next stop on Chinese index is the Wednesday high, which was 14,010. Let's see if we break through there. And just to show you how it really looked, I wanted to bring the Alibaba stock and take a look what happened here. So it really reacted as one of the leading Chinese companies. It's been really killed. I'm not afraid to use the word. It's been really, really killed in the past days and weeks and months. And then with the news from China, the stock really was gapping up nicely and then continuing to the upside. So on that excitement, of course, it added excitement to other indices, and partially this could be a reason why the world indices really start moving up with this recovery on the Chinese index. And let's take a look at the European. Before that, we'll take a look at India, the Nifty 50. Take a look. What a nice recovery here. And again, we might be facing resistance here. As you could see, a lot of actions happen around this level. So we did break through it. And let's see if we come below this level again, we might see correction to the downside. Now, European indices also reacted very nicely to the upside. DAX, the only thing DAX had a nice move on Wednesday, but it really didn't go any higher. So I guess the Wednesday high would be our indication what happens next. We could see a resistance here. Of course, Germany is highly affected by what's happening in Europe with the war and everything else. So we might see a pullback from here, or if we start closing higher, the alternate scenario, we might continue higher here. But I'm not sure if that's what we looking into in the upcoming week. FTSE also had a very nice move to the upside, and we are facing also a very contaminated area, if you want to say it, where a lot of things have happened. And again, we might be seeing resistance here and a pullback to the lower levels. And the French index, similar thing. We are moving higher, but as we trying to reach these levels where we had a nice support, then resistance, we're slowing down. So again, we are on major indices, we are at the levels that we might see a strong support here. And again, we could break through it, but we need some proof that resistance really becomes support in order to go higher. And most likely, with a lot of things happening in the war and everything else, we might see a lot of resistance from indices to go higher. So let's see how the week starts. So that's as far as indices. And let's take a look at stocks. Of course, if you see indices moving tremendously pretty much in the last week, so the stocks went up strongly as well. Amazon had a very nice move, a nice recovery. Again, even on the stocks, you could see that we are approaching certain levels of resistance. Apple had a nice move after really falling to around 150. It was a nice recovery here. If you take a look, even Netflix pushed up. But what really caught my attention that Facebook, after really being beaten up, it starts showing some signs of life. And this is very serious here. And I've been seeing some reports and some announcements and some opinions, and some analyst says that at 200, Facebook is a steal. So a lot of them really start buying around 200, I guess. And what happens here, this was the previous resistance from which we made the lower low, and the high here was 212.88, so let's say 213. So Facebook, if we are holding this level 213 and the market is not pulling back down, we might see a continuation on Facebook to the higher. So a lot of eyes on Facebook, as it's a serious company, of course, and we'll be watching this 213 level, how Facebook is acting around it. Now, also, I want to bring out the banks, and they really had a little bit of a recovery after really there's a steep move to the downside. This is the Citigroup. After establishing some kind of support around 53, 54, we had a nice move higher, but we are facing resistance, looks like it. So I guess this level from which we bounce can be very serious. The low here was 58.91. So if we continue to the upside and start really seeing some price action building support around these levels, 57, 58, we might see a continuation to the upside. So that's the Citigroup. JP Morgan, similar idea. And we are past this level here from which we bounce. So the same thing, if we're holding these levels, we might continue high. If we start closing below 139, 139 and a half, we might continue sliding. As you know, these big name banks, they pull out from Russia, and of course, a big chunk of business. And this is one of the reasons why the stocks really fell since the war started. And this is, it's right here. If you take a look, February 24th, this is the candle here, and we've been falling since then. That's the day when the war started. Goldman Sachs, similar idea. We found some kind of support around 323, and now we're on the way higher. Let's see what's next. So the banks are feeling a little bit live, and let's see if they hold it. Now, as far as the earnings, Nike, I just want to bring Nike to your attention. They are reporting on Monday after market close. So a lot of analysts don't really expect anything good out of these earnings because of the China issues. As we said, there's a lot of issues in China, including the fight with COVID, and they shut down a few cities, a few provinces, and also back to Apple. Apple said that there's a factory that's providing some chips or whatever the instruments for the iPhones, they really shut down because of that. So Apple really reacted to it. So China is really affecting Nike as well. So let's see what happens there. And because of that, the analysts are not really expecting anything good coming out of Nike. As you could see, it did recover a little bit, but the fall was tremendous. So if you take a look at the weekly chart, we did hold this level around 127, and then on the week before we broke through it, and now we're back about this level here. So if we're holding here, there's a hope for continuation, but if we dip below this 127.5 level, we might be continuing sliding to the low side. So let's see. Attention is to earnings that coming out on Monday after the market close. Okay, so let's move to Forex, and we start with dollar index. Dollar index has been very, very strong into the announcement on interest rate, and this was right here on Wednesday, the 16th. And with the announcement, I guess the investors were expecting a little bit tougher actions from the Feds or whatever they were expecting, but dollar really sold out for 2 days. Friday, we tried to recover. For a moment, we broke about Thursday's high, but we pulled in still a green day, but to the downside. So let's see what the major currencies did, the major currency pairs. As you could see, euro has been really, really weak lately, and this war, of course, added to the downside of it. And it looks like 110, 110.97, so 111 level. It's really a strong resistance. We tried with the tails about 111, but we closed lower. And Friday was a red day. And just to pay attention, we really recently, in the past few days or few weeks, we went as low as 108.05, and then we climbed almost 300 pips to the upside. So this is the channel we're trading in. Now, to see any moves to the upside, we would really need to see some kind of strong action above 111 level. So far, we don't see it because every attempt to break through it is really facing a strong resistance here. So if dollar regains some gain and continues higher, which logically could happen as we're facing more interest rate increases, so euro can easily continue sliding to retest the lows over here. So this is something to pay attention to. If you take a look at the pound, also we're really fighting this level here. So you can see we had multiple attempts here to break it as we had the strong support, after which we had a nice move higher, and then we kept on making lower lows, lower highs, and we made a move below 130, and this level here, 131.70, back to it, we're really fighting this level. So on Friday, only on Friday, we closed above it. So there's a potential. Again, we have CPI numbers from UK. Let's see how those numbers will affect. But there's a chance that if we establish some kind of support here, if we have confirmation, maybe another day, a Monday or Tuesday, opening and closing about this level, we could see a move higher on the pound. So pound has a chance here. Australian dollar has been very, very strong. And partially, or I guess a big part or big reason of it is it's a recovery on China. Let's go back to China, take a look. That recovery started on Wednesday, and if you take a look at the Australian dollar, really started a nice move after this fall to the downside. On Wednesday, we came to the previous resistance here, and then Thursday with the super move higher, and Friday even higher here. So why Australia? It's as we know, Australian and New Zealand dollar, they call them commodity currencies. Why? Because they do produce a lot of commodities, and China is one of the biggest buyers of those commodities. So as things got better in China, there's a big future for, or better future for, Australian dollar here. So, and that's exactly how it reacted. So what's next for Australian dollar? This is the level here around 174.30. We did try to break through it. This was on the 7th of March, and then we sold. So we are on the way to retest it, and we are about 15 pips away. So it's very interesting how the market will react here to 74.30. Again, when I say 74.30, it doesn't mean that that's the level. That's the area. So it could be 74.30, 74.40, 74.50. It's never just one number, just for your information. It's just the specific level that I set up from which, in this case, from which we had a nice fall here and that was back in December of 2021. So we're slowly approaching that level again. Now, New Zealand dollar, the same thing, similar to Australian dollar with a nice move higher, and we're facing again some kind of resistance here. This was a strong support. As we know, at some point, support become a resistance the moment it stops being support, like here. So it was a support, then we fell through it, and now we're trying to retest here. The same thing on the 7th of March, we tried to retest it, we failed, and now we back to that level here, and that's around 69.09, and that's Australian dollar. So again, let's see, interesting. Some currencies are at interesting level, and as they have a potential to either continue or face a strong resistance and pull back. Now, as you remember, I mentioned to you the Japanese yen. With the market is back to risk on or to bullish side, the Japanese yen is tend to sell, and this time sold really, really heavily. So this is something that looks super vertical, and that's Australian dollar. So on one side, money went to work on the risk on from the Japanese yen to the equities, and also Australian dollar got a lot of strength. So take a look how strong this move is. And if you look even on the weekly chart, you still on this chart don't see the next level. And the monthly chart, you could see that we're actually facing, potentially, again, we're facing a resistance around these levels here. So this was the last time we faced. So I mean, you can play with this level. Of course, it's very subjective. If you take a few traders, they might draw their levels in a different way. I'm going to choose this level here around 88, 88.07. Why? Because we start the move that created a lower low from here, and that's the high here was 88.11. So 88.11. Let's just set it up really quickly. 88.11 is the level that I want to be watching, and we did break through it. We're 20 pips higher than that, so we might continue. But again, logically speaking, this was a very strong move, 1, 2, 3, 4 weeks straight. And if you see on the daily charts, 3 days straight up, no pullbacks at all. So there is a potential that we will try to pull back. Again, it depends on a few things. Depends what China is doing next, and also depends, of course, what the equity markets are doing. If we continue risk on, the yen could experience continuation, the weakness, and if the markets start pulling in and selling off, that the yen could regain some strength, and this pair could move south or down from here. Now, Euro JPY also, even though Euro is weak, but yen in this case is much weaker. So we had a nice move to the upside. New Zealand dollar, the same thing. And New Zealand dollar, similar to Australian dollar, they're really facing, and in this case, it's really right on the level from which it could turn around. The high here was 82.37, and the high on Friday was about a pip away from it, and we closed about 7 pips lower. So New Zealand and Australian dollar against JPY, in case the market pulls in the upcoming week, could be a nice candidate for possible shorting here. Canadian JPY also very strong, and pound JPY also very strong and facing resistance here. So again, on the Forex, we'll be watching what dollar will be doing. If we're holding these levels, and Friday was a green day, if we start moving higher, of course, the major currencies will react to it. And if the market pulls in, all these pairs that to do with Japanese yen might experience some weakness if the yen will regain some strength. Now, let's go to commodities. Of course, everybody's looking to crude oil with everything to do with Russia. And we had a huge move higher in the panic of the war and everything else, and then we had a super fast drop. So just to give you the numbers, the high here was 130.5. We went to $130.5 on oil, and then we dropped by the 15th. We dropped to 93.5. So we give away about $37. It's about 30% move from the highs to here, and then we established a little bit of support around here on 94, 95 level, and then on Thursday we had a nice move. We went from 95 to 104, and then Friday continuation. So we might see continuation to the oil. Now, how high? Nobody knows. The initial panic probably disappeared, but it's still a commodity that's in high demand, and we might see continuation to the upside of oil, but at least we know in case we go lower. So around these levels, around 94.5, 95, we kind of having a support. So if we do pull back again, the buyers probably will be trying to place limit orders here and hold the oil again from falling lower here. Now, natural gas, it's been strong. It held this 450 level here, and then we again trying to retest 5. The high here was 499.4, and Friday we pulled in a little bit. So we are trading now. If you take this range between 450 and 5, about 50 cents range, and what I want to see this trend line broken to the upside if we planning on going higher. As you could see, we do try to establish a support, and technically speaking, if we do break this trend line and start closing higher, there's a possibility of it going higher here. So that's a natural guess. Now, Palladium, I spoke about Palladium and wheat. We'll get to the wheat in a moment. Palladium, similar to oil, also with the panic cooling down, where it's super fast drop to the downside, established some kind of support around 23.40, and broke through this resistance of 24.18 on Thursday, and Friday we pulled in half of the previous day. So at least we know that this is a support around here, around 2400, and let's see if we pull in again or we continue higher. As we know, palladium, Russia is a big producer of it, exporter of palladium. And as far as soft commodities, I just want to bring wheat because soybeans and corn, they didn't do so crazy, but wheat, similar to oil and palladium, had a nice, a crazy move up. At some points, they wasn't really trading. It was a limit up, so the price moved to the levels that it wasn't really trading on the exchange. It just opened and stayed there because the price went super high. And we did sell a little bit here, not a little bit, a lot from the highs. And we also, similar idea to oil and palladium, we established a little bit of support here, about 1040, 1061. And let's see what's next. Again, it's very important, especially in wheat. It's important because it all depends in this case how the war is going, because as we know, Russia and Ukraine are big producer of wheat, and it depends on how things are there and on how the next harvest of wheat will play out. So it's very, very important here. So that's the commodities. And let's take a quick look at Bitcoin and see what's happening here. So Bitcoin, it's been kind of ranging here between, as we said, between 45,000 and 37,000. And we did establish the support around 37,300. From here, we moved straight up, and then we touched it again, and now we established the support in these 2 days. It looks like they're not really letting it hit there. So the low was 37,570, and the low here was 37,550, and we moved higher. So we are on the way. It looks like it. We're on the way to retest 44,000, 44.5. And this is the range, and a lot of talks about it, a lot of regulatory talks about it. US is talking about taxes and everything else, so that's on the big picture. Technically speaking, we are in the range, so nothing big is happening. I think I mentioned last week until we break out of the top of this range and continue or establish some kind of a price action supporting this. As of now, it's in the range. We close it to the top, then to the bottom of this range. What's going to happen? I don't think anybody knows. Of course, the holders of Bitcoin or any cryptocurrencies, they're hoping for gazillions of dollars in profit. It could be happening. There's a lot of pessimists. They're saying that it's not going to happen. We're here to watch, and in case we need to trade, we need to be smart. So again, for the big picture, we need to break out of the range to go higher. So let's just summarize. Let's summarize what we spoke about today. Again, big picture, we still have COVID, and in some places the numbers are growing. It looks like another variant is showing up. We have a war in Ukraine, which is unfortunately continuing. It's a fourth week of it, and that affects everything from commodities to banks to individual companies that pulling out of Russia. So that's on the geopolitical level. Now, markets had this huge move in the past week. This week, we're facing some kind of resistance on across the board on indices. And let's see what happens. If those resistances are holding, we might see a pullback on equities. Also, Powell is speaking this week, and we have more announcements in the upcoming weeks as far as what they're going to do with their assets they're holding. And that also is very important for the markets. And again, I just want to mention something that some of the customers mentioned, that they're really upset with themselves. It looks like they don't know what they're doing, and they don't know, they say, oh, I'm a bad trader and so on. I just want to tell you, there's no such thing. In today's market, it's very hard to trade, even people with a lot of experience. And I do have about 22 years of experience, and I do lose money by trading as well. So we can't really control the market. Volatility is high. As you know, the VIX went to 34, 35. The volatility was very high. Market's changing its mind very quickly. So what I just want to say, don't blame yourself, don't beat yourself up. But one thing that you should be doing is really have a plan as far as controlling your risks. And that's something that helps me. You set up your criteria and risk. For some people, it's a percentage of the accounts. For some people, it's a certain amount of pips. Whatever you choose to do, have a plan and stick to it. Okay, because the market is there. Sometimes it's really giving us some excitement on the positive side. Sometimes it's really upsetting when it doesn't do what we want it to do. But don't try to be right. Try to preserve your capital and try to have a plan as far as the risk management. Okay, and don't beat yourself up. Be happy, have a plan, and be healthy, first of all. I wish everyone an amazing week and all the best. Take care of yourself.